Sean Fieler, CIO of Equinox Partners, joins us today to talk about asset allocation in the gold junior space. Sean, it's a pleasure to see you again. Now, last time you were on the show, it was a few months ago in the summertime, and you had maintained a bullish stance in the gold equity space. I'd like to ask you why you haven't changed that stance. You and I were talking offline, given that we do have a new administration moving into the White House in January, and new policies will be instituted.
Well, the Biden administration is not going to be in the business of cutting spending, just as the Trump administration wasn't. And with a Republican Senate, we're not going to be putting through tax increases. And so we're at a starting point where the federal government's spending roughly twice what it's taking in revenues. And that looks to continue, and that's going to be very bullish for gold.
When I asked you the first question, I was operating under the assumption that Biden would take over the White House in January. Would you like to comment on whether or not there is a chance that Trump could take it? And if not, what the ramifications of that would be on the investment landscape?
Well, I think Trump got it exactly right this last week, and he tweeted that Biden won because the election was rigged. And so there's two facts there. One is that Biden won, but the second fact I think is equally important. You have now, according to a political poll, 70% of Republican voters believe that the elections were not free and fair. And so that is really going to inform how McConnell and the Republican Senate interact with the Biden administration. I think it's going to be similar to the way that Nancy Pelosi interacted with the Trump administration. It also is going to have a lot to do with how the Republicans attempt to take back the House in 2022. They picked up 16 seats. If all the races still out break their way, 7 left to get to a majority in the House in 2022. And so I think that's going to make it difficult for Biden to move much in the way of legislation.
You're right. Trump did make that tweet. He also tweeted, though, however, as a follow-up, that he concedes nothing. So, he's not really admitting defeat with that tweet. Do you see this contesting to last well into January, and could this add volatility to the markets?
Well, I think it certainly goes through December 14th, and I think the problem with not contesting is going to be the data. And you look at the data anomalies in the election, and that's probably going to get worse over time in terms of convincing that 70% of Republican voters that there was something amiss with the election. And so I think doing the investigation now is important for the integrity of our elections going forward. But I also think that problem's simply not going to go away.
Let's talk about a divided Congress, Republican-controlled Senate. What does that mean for taxes and fiscal policy?
Well, I don't think the Republicans are going to be aggressively in the business of cutting spending. They weren't under the Trump administration. I think that's going to be hard for them to position themselves that way under a Biden administration. On the other hand, I don't see any reason why they would put through tax increases. With the Fed monetizing the deficits, no matter how large they are, why Republicans would go along with tax increases, I think is difficult to fathom politically.
Yeah, there's rumors of Shelton's confirmation. Can you talk about that and how that might impact gold prices?
Well, I think having her on the board of the Federal Reserve is going to be a real positive for gold investors in general. She is part of mainstreaming gold as an investment idea. Her nomination has been stalled for months. It's a year and a half in now at this point. She had her confirmation hearings back in the early part of this year. But as of last week, Senator Cornyn from Texas tells us that they have the votes to confirm her, and they're going to go ahead with the full floor vote. So I'm optimistic that she will be confirmed and sit on the Fed's board through 2024. Yeah,
Janet Yellen is rumored to also be a candidate for the Treasury. But do you think that's going to change things on a substantial level?
I think whether she or Lael Brainerd is Treasury, I think we'll see a Secretary of the Treasury that will be very practical, certainly less ideological than Elizabeth Warren would be at Treasury. And I think basically continuing the same kind of policies we saw under the Obama administration from a Treasury perspective.
Now, what about foreign policy? Do you expect challenges with foreign policy in the Biden administration, or do you expect geopolitical tensions to come down? I've spoken to an analyst recently who said that should he launch a charm offensive with China and ameliorate tensions there, it's possible that could weigh down on gold prices.
Well, I think just last week, his foreign policy team came out and extended U.S. protection to some of the islands off the southern coast of Japan. So the idea that we're going to de-escalate with China right away doesn't seem to be consistent with where his foreign policy team is. I think that also politically is a non-starter. I think actually we'll see a Biden administration that will be significantly more hawkish than what we saw from the Trump administration. So we won't see that effort to bring the troops home, and we're going to see more of a globalist, internationalist approach.
Well, let's talk about monetary policy now. Where do you see debt levels headed? Can we expect debt reduction on a sovereign level and corporate level as well? Or do you see more stimulus and a continuation of the debt buildup?
So this year we had, in the fiscal 2020 in the United States, we had deficits in the high teens as a percentage of GDP. If you look at the CBO projections, there's no year in the projections where we get the fiscal deficit below $1 trillion, and that assumes a strong economic recovery. So I think, will debt to GDP continue to rise in the United States? Yes. Are debt levels in the United States unsustainable? Yes. Will interest rates stay very low? Yes. Will we continue on with QE? Yes. All of this is very good for gold. There's just the idea that we were going to normalize. Almost no one's making that argument. It's just not in the cards.
The other important factor affecting gold prices is inflation. So give us your take on inflation.
Well, the Fed this August came back with their 5-year review on their monetary consensus, where they updated their 2012 initial statement on the monetary consensus. And they went through the trouble in the document to, instead of saying that the Fed has a mandate to have stable prices and low unemployment, they reversed unemployment and inflation. So which doesn't seem like it means much, but the idea that they would go through the effort to put their focus on unemployment prior to inflation, I think tells you a lot in terms of where the Fed's leaning internally. They're just not that concerned about inflation, and they are very concerned about unemployment.
So if they're not that concerned about inflation, does that signal to you that inflation may not be as much of a tailwind for gold as some analysts have expected?
No, I think they're wrong. We have M2 growth is 24-25%. I think this is the type of logic, the type of mindset that precedes higher rates of inflation, is that type of complacency that we have today on the part of monetary authorities, the Fed included. So they're not alone in their view on this, but we've had a long cyclical bear market in commodities. I think that reverses. We have unemployment rates now down to 6.9%. We're going to get a vaccine. Hopefully the economy continues to strengthen. All of this will be inflationary at the margin, along with the trade policy that was part of the Trump administration is, I think, likely to be part of the Biden administration as well. We're not going back to the trade policy of the Obama administration. That's just not going to happen.
All those things you mentioned that might be inflationary, like a vaccine and a recovery in the economy, could also weigh down on gold, could it not? Because that would be a risk on for equities investors.
So if interest rates are going to be pegged at zero or very close to zero, and we're going to be slow in walking back quantitative easing, and we're going into a cyclical expansion, along with expansionary monetary policy, along with the new administration that wants to spend more and a Senate that doesn't want to tax more, all of that to me looks like that's going to be inflationary rather than deflationary, disinflationary.
Okay. Let's zero in on gold miners now. The GDXJ, I'm looking at the charts. It's been kind of flat over the last couple of months since July. And some gold investors are wondering why. Given everything you've talked about, given the environment that we're in, shouldn't we still be headed higher? Or do you think we're fairly valued right now?
There just are not inflows into the junior mining space. We have good size inflows into the metal itself. So if you look at the gold ETFs globally have added 1,000 tons this year to date, which is a record number. But we haven't seen anything like those inflows into the passive gold mining ETFs. They're kind of flat, and over the last year and a half, they're still kind of negative. So we have some capital available to junior miners, good valuations for the senior miners on a NAV basis, but we don't have generalists coming back into the space en masse yet.
Do you think this is a chicken and an egg problem, Sean? It's like, people come into the space when there are higher prices, but the inflows also indirectly or maybe directly contribute to higher prices, would they not? So what comes first? What needs to come first?
I don't know. This is why it's good to be a value investor. You look at the companies at the current, metals price, and we own companies with 20% free cash flow yields today in this market. So the valuation of these companies still really jumps off the page. And the free cash flow yields that you can get in this space with companies that have very little, to some cases, absolutely no debt, really are in sharp contrast to where you see equity valuations in general today.
One of the concerns for gold investors, Sean, is that Biden wants to institute ESG, environmental social governance policies, that may weigh down on the valuations of gold miners. We know he wants to join the Paris Accord again. We know he wants a greener future for America. How's this going to impact valuations?
Well, for the select few companies and juniors in particular that are operating on federal land, I think that's going to be a problem for them. Most gold is mined outside of America. Most gold mined by Canadian and Australian juniors is mined outside America. And so it's not clear that there's a immediate flow through to how these companies are operating. And I would point out that most of the bad actors in the space are neither the Canadians nor the Australians. They're foreign government-owned, Russian, Chinese, or artisanal miners, where you have the real environmental problems.
So let's talk a bit about Equinox Partners. You are a gold value fund, so you primarily invest in the gold junior space. Tell us about your thesis. Are you primarily in the space because you think valuations right now are good, are low, or is it because you foresee a lot of M&A in the space, or maybe a combination of the two?
So certainly a combination of the two. We are long-term investors. We're not buying companies looking for other companies to buy them. Our typical holding periods are 5+ years. We spend a lot of time getting to know the managements, the assets, the directors in many cases. We really see ourselves as partners with the insiders of the companies in which we're invested. And we're really looking for better assets, better operators for whatever reason that aren't properly appreciated by the market. And those companies tend not to have catalysts. They just tend to be compounding value with better assets, better managements, and misvalued because they're out of favor.
Sean, what are you doing with cash right now? Are you building up your cash reserves and building dry powder in anticipation of more volatility in the markets up ahead? Or are you adding to your stocks positions with the extra cash that you may have?
No, we're fully invested. So we are not leveraging our portfolios in Equinox very little at the margin, but we are fully invested in gold and silver juniors. We think it's very early in the cycle. We think we have 3 to 5 years to go. And this year with the rise in metal prices on a NAV basis, a lot of the juniors have actually gotten cheaper over the course of the year. So relative to the prices of the metals, the companies are cheaper today than they were in January of this year.
I guess let me rephrase the question because this ties into what a lot of retail investors would like to know. If you had cash available, let's say if 10 to 15% of your portfolio right now was just cash lying around, what would you be doing with that? Would you get into the space now, or would you be waiting for a potential pullback?
No, I think now is a good time. So I think you as an investor, as an institutional investor, individual investor, you don't want to look at gold and silver juniors today as a trade. This is not a 1 month, 2 month, 3 month volatility getting in and out. I think this is a 3 to 5+ year opportunity, given where fiscal policy is, monetary policy is, and given where the valuations of these companies are, how underowned gold is institutionally, how underowned the juniors are institutionally. This is really an opportunity to buy the better companies with the better assets at very attractive prices and own them for long periods of time, not to trade around the edges.
As a fund manager, Sean, do you think about hedging your positions at all, given that you are concentrated in one sector?
So we do have shorts, not in the gold and silver mining space. We have put on hedges in the past. I think now, given where metals prices are and given where junior valuations are and given where we are in the both monetary and fiscal cycle, now is not the time to really be hedging your portfolio. I think now is the time to pick your favorite juniors with the better managements, better assets at the right valuations and own them for several years.
When you do, valuations calculations for your holdings, what assumption do you use for the gold price?
Spot. So if you put in 1900 or 1950, you can take a company, Dundee Precious Metals, we've owned for a number of years. We've been sellers recently, but it has a 20% free cash flow yield at the current metal deck. So
You don't make a projection based on your macro thesis and plug that in?
No, we're just using spot. I think when silver got to $11 this March, we were using meaningfully higher prices in terms of how we were evaluating silver companies. So we weren't using $11 forward. But generally speaking, we're not, you don't have to. The market's simply not asking you to use a higher price deck to invest in these companies. At spot, both silver and gold prices, these companies are very attractive.
The industry doesn't need higher prices, is what you're saying?
Certainly the stocks don't need higher prices. I'm sure the industry would want higher prices. And to be very clear, there's certainly projects that need higher prices. The companies that we own are very undervalued at current prices.
What's the beta on the sector? Let's say gold goes up another 30% next year. Suppose it does. What would happen to the valuations of gold miners?
Well, if you look at an ASIC of $1,000, maybe you're getting back then $1,000 an ounce at $2,000 gold. You're discounting it back at 5%. So depending upon the life of the project, less than 2 to 1 in terms of the multiple that you should get to the underlying metal price, but maybe not that far off.
All right. Final message to gold investors in terms of the risk you're looking for, Sean?
The risk, I think there's still a pretty severe bear market mentality amongst generalists and institutional investors when it comes to gold and silver mining. And if you don't share that mentality, I think now is, and this year has been a good time to own these juniors, and I think it'll continue for some time.
Okay. Thanks a lot, Sean. Appreciate your thoughts. It's good to have you as always.
Thank you, Dave.
Thank you for watching Kitco News. I'm David Lynn. Stay tuned for more.